So, hello, and a massive hello to everybody. Hope everybody's having a great day. We're doing another one of these Substack videos here. No trade calls, recommendations, or response with their own stuff. 2nd of September. Let's do this. I thought we'd take a look at ES going into September, whereas we should see some interesting moves. Now, again, everybody's going to be talking about the fact that September is weak seasonally, one of the worst months, if not the worst month of the year. Clearly, a lot of interesting things are going to be happening. We've got the most important NFP report until the next one coming up here this Friday. We've got the FOMC meeting, and again, going into a big OPEX quad witching. A lot of interesting stats, a lot of interesting trades around that, with seasonals also being very weak the week following, quad witching. So again, but without talking about all those things, let's just look at some pure technicals and see where we are on the charts and what I would be looking at short term and longer term. So here, if you look at the bigger picture on ES, essentially, I think a couple of things a lot of people will be clear to a lot of people is, first, you had this impulsive move here, A to B, back into C, which extended, and we're kind of sitting at the 161 extension of that move and stalling here. This is an interesting place to see a little bit of a correction. And the most interesting fib move people are probably looking at, again, on the monthly, is this move here, into those highs. We had that correction this year that, as we said, we discussed, I think, here when we talked about SPX2, is that you have to consider that this could be a very significant swing low, and you can see how pure this is, right into those previous highs held and extended lower. So here, the two big reference points I would have here is that 123 extension of this breakout, this current fib we're in, that is pointing to a move back into 68 something. And then to the downside, we have clearly this previous high here that was defended with a 50 back of that move from A to B here, right? So essentially those are key reference points. And of course, you would have that recent high where we're drawing the fib. So you can take the fib out, and these are really the key reference points to have in your chart, right? The big base, which we coiled and held beautifully to extend higher, the all-time highs we broke out to, and that initial extension target going up. Okay, so flipping back into the weekly, you can see how pure this looks with the moving averages and everything. But what is important to keep in mind from the higher time frames? Well, first of all, on the monthly, remember, really, in terms of market models and stuff like that, and as long as we don't close below the 10-month moving average, everybody's going to be still by the dips. There's really no amber lights are going to start to flash until you see a close below that. So here, any correction back there is likely buyable and shouldn't be seen as the end of the world or panic. Even a move back down into this previous highs off these highs is about a 5% move that, wouldn't shock anybody in September, right? So coming back into that also weekly, another thing to consider is that, even if we do correct and break those all-time highs, those previous all-time highs, and we go, you could also just see this as a broadly very neutral zone, right? So basically the market, whether you like it or not, whether it's for the reasons you like or not, has rallied very aggressively, and it's gotten so much room to the upside that here, whichever way you look at it, huge corrections in terms of the higher time frames still keep it in a bullish market. The bull market is still alive and the technical is still rotating higher, right? So one thing which I would look at, and keep in mind, I think what you've seen, because of the volumes that are very anemic that we're seeing continually every day, and failure to take out those highs, to me, that really tells me that there's, I hate using the word, but a lot of cash on the sidelines, and people are not chasing at highs, but not fully invested and begging for some kind of a pullback. So even though the bears want to see a puke and an unwind, the bulls probably want to see that too, to be able to reload. So keep in mind, if we do get a decent correction, that all those key technical references are going to be probably met with very aggressive buying. Okay, shorter term, if you look at this on the daily, again, what is clear is that it's kind of like somebody in the room the other day told me, like, worst all-time highs ever, because you could see here we're printing all-time highs Correct. All-time highs, all-time highs, all-time highs, and we really can't get any traction. Now, interestingly enough, the recent all-time highs, we'd set those in an overnight session, so you'd expect to have unfinished business to the upside. You wouldn't expect to see a decent swing high set. And then last week, we got those all-time highs hit during RTH, so that means there's a little bit more room to run freely to the downside here. So what I would be looking at is, as long as we're holding here below the 10-day moving average on the daily, this opens up an unwind of this whole move all the way back into those previous all-time highs, which is around, the 6,200s. And any pullback there, which should be about something like a 5% off those highs, is really not bearish at all. Now, if you see all these moving averages coming into here and we start getting closes, weekly closes below this, then it doesn't look good. It looks like this is a false break and we have, this is a false break and we have to correct much lower, but that's something for later. That's not something that would be on the cards right here. So I wanted to give you a little bit of an insight on how I would look at this here, also on the shorter time frames going into this week, because we're likely going to get a lot of headlines with the data. Things could be a little bit choppy. And the way I would look at this here is highlight the importance of the I call it, the Jackson Hole range or the Powell range. So here, what I'm going to do is I'm going to highlight and basically plot here in yellow. I'm going to move this to, if I can manage to get this to work. Here we go. This is the Jackson Hole range highlighted in yellow. Now, you can easily look at it as when Powell started speaking this ramp, but I think it's really important to forget all the other short-term reference points and focus on this range. What that means is that after we'd started to correct lower and we got Powell coming in, saved the day. If you look at the volumes, if you look at the way this happened, this looked like a short-term squeeze. It doesn't look like there was any real aggressive all-time money buying. We came in, retraced, the retracement got bought, and then, all these new highs couldn't find any traction, couldn't find any buyers. So right here, what you've got is, where the pain trade after these ranges are set is, a lot of stops should have been above these previous highs, above that high, and all the longs buying aggressively, setting their stops below these lows. So that the market, if the market wants to look for stops, wants to try and force some Momo, it's at both sides of this range that you have to go and look for it. And what happened here is we took out the upside and we couldn't get any traction. We couldn't attract any new buyers above the Powell high and above these highs. So what that means is usually it's just traded as a range trade. So your base case assumption is that the market is going to try and come all the way back down and test the opposite side of this range and see if it can flush some stops below there. If we go back down and unwind that whole power range, doesn't mean that it's the end of the world. No, it just means that you've had very technical trading around that range. Is that what you would expect? Clearly, if we take out this highs, that completely changes. But right here, the way this is being trading, the action, our base case assumption is that this is a failure to take out that upside and the market has to come back and test the opposite side of the range. Now, also, you can also look at it in terms of this kind of action. When it breaks, it comes back and it unwinds the scene of the crime. Now, what is interesting here is also, if you just step back a little bit, right, our base case was that this unwind, you see, we failed to take out this highs and we had this failure and we started to unwind. What was that move? This is the move that was trying to play out. We were trying to unwind this break, and our base case assumption was, again, bar Powell, that we were going to come all the way back down here. Now, what happened is that got derailed with that short squeeze on Powell, but the fact that this is a false break of these highs, we finally got the high set in RTH, means that if we unwind, if this move was just a short squeeze, it was BS and it couldn't attract any new buyers at highs, our base case is that we're going back to this original move, this original move here, which was the unwind of the move from A to B here. Now, was that trying to form a complex head and shoulders? I don't know, but the base case is that this move still needs to be unwound, that this is a Powell is a false break. And right now we're likely going to decide here sometime this week if we're going to, if we're just going to keep on ranging here in a neutral zone, or if indeed we're coming right back into those lows. Now, why is this action so interesting? This action is so interesting because what are these lows that we just drew? These lows are repeated protection, remember, of that 6,200-ish level. You see, once we broke above, that was that previous all-time high. Let me flip back to the daily, right? That previous all-time high. And this is the breakout. So in the same way that we talked about that false breakout of the Powell range, unable to attract new buyers at highs, in terms of the bigger picture, is this another big false breakout, unable to attract any new buyers at highs? And do we need to unwind this whole move, right? So that's why it gets very, very interesting. So this 6,200 level is really the most interesting level, because failure here opens up the possibility that we have to unwind all this move. Now, again, I'm not saying that's going to happen this week. We're just talking about levels to give you ideas what to look for, because we don't do these updates that often. So I think that that's the way I would be looking at it. Again, going into the week, you're seeing how every time we're getting false breaks, we've got a lot of ranges that need to be unwound, let alone the bigger one here, and lining up with bearish seasonals, bearish quad witching, yada, yada, yada. This could be a very interesting time to look for some pullbacks. Again, does that mean that it's the end of the world? No, but it means that, especially if you're looking for longs, let me put it this way. If you think you're going to buy here and we're never going to trade lower, right? Chances are, if you want to be long, you're going to get a lot of chances to buy cheaper in September, right? Also, this is going to set up our trade into the expiry, into the end of the month, which likely means we see that heaviness after quad witching. So right here, basically the message is be careful at highs. Market doesn't seem to be able to attract new buyers at highs, doesn't seem to be able to attract new volume, and it looks like we need to pull back a little bit. Now, where does that really becomes concerning from the bigger picture? I mean, the bulls have so much leeway that, you know, even if we break back below the 6,200, there are a lot of supports to the downside. But would it be crazy to see an unwind back into 4,800s? No. But if you look at the way Washington, everybody's trying to pump the market and so concerned about the market, that shouldn't be your base case assumption right here, right now. Base case assumption should be that there's seasonal weakness coming in. There's some technicals that show a possible weakness coming here, and the most logical place to come and look for that, look for support, is into those 6220s, into those previous all-time highs. When we get there, then it's a different story. Then if we get there, maybe we can do another video. Okay. Hope this was useful. Wishing everybody an awesome one. All the best. Take care, guys. Bye-bye.